Yo, what's going on YouTube? And welcome to my stream for today. I've got some research and slideshow that I've prepared. Let me just pull everything up here. All right, here we go. So the first thing that really stands out in this whole window between a couple of days ago to today this morning is mainly that the White House is stepping in to host a direct meeting between major banks and also crypto companies to unblock a lot of the legislation that's been installed around crypto. So what's happening here is very simple on the surface, but also very important underneath everything. So the US has been stuck inside of a holding pattern where the lawmakers cannot necessarily agree on how the crypto bill should be treated or executed, especially around stablecoins and whether they can offer any forms of rewards or even yields. The banks are worried about losing control. The cryptocurrency firms, they're worried about being shut out, and the White House has decided to act as a referee instead of letting the fight keep dragging on. So this is actually quite bullish for my business, SolShot Silver.xyz, because more people or more confidence, or I'm sorry, this gives people more confidence rather to engage digitally without worrying much about sudden shutdowns or even rule changes. So when the rules are much clearer, people are more willing to use those transparent systems that connect digital activity to something more real. This fits directly into the website's value proposition because my business is not selling hype or financial promises that can't be kept. I'm simply converting people's real digital engagement into something physical like SilverShot. Um, and I also offer non-custodial trading bot. I also offer a non-custodial trading bot, which is also very compliant in the future that we're seeing for cryptos. So I technically don't need to become a money service business if I'm not handling customers' funds, and that's a defining principle that a lot of startup businesses are going to have to just know moving forward. We do not rely, or yeah, my website does not rely on yield language or even custody. So this means that the clarity that's being provided is actually favoring my entire business model. When we zoom out of this, it's actually showing us a very small but noticeable shift in the global power structure, and it's been happening for since I've really been building out my website. It's actually sort of been a gift, in a sense. Now, another story that matters. Let's see here. Is the it's the backlash against the U.S. Department of Justice for shutting down its dedicated crypto crime unit. So what happened is that senators publicly questioned why a unit was designed to focus on digital asset crime was dismantled at a time when the crypto-related fraud and theft remains very significant. There are also concerns about conflicts of interest and whether the enforcement is actually being applied evenly. The This creates a very strange environment where the rules exist, but the enforcement feels very inconsistent. And this is very neutral for my business because My platform is not built around exploiting regulatory gray zones necessarily, or um, even pushing the edges of legality. My business was designed from the get-go with legality and those gray zones in mind. So I'm trying to work well within my means as an individual that's trying to start something really unique. I already operate with very strict guardrails and transparency from what I was saying. So the enforcement necessarily, those changes do not directly harm or help my business in the short term. But what this is telling us is that the users are increasingly skeptical of centralized authorities that are claiming to protect them, but while also failing to do so very consistently. Um, So my business's value proposition becomes more clear here because I remove the entire custodial risk entirely, and I allow users to earn real silver without actually trusting an intermediary to safeguard their funds like a money service business would. Um, my business solely relies on the clear actions from its users and not necessarily any promises. Um, so, in the bigger picture of things, what does this say? This only moves the global power um, structure just very slightly. Um, I don't say that this is, well, you know what? I think that I gotta adjust these instructions to be a bit more clear when it creates the monologue here. But anyways, let's continue. Um, actually, I'm gonna write that down really quick. So the monologue's instructions has to be more clear on when it's describing the effects on the global power structure, how it's being moved. It needs to explain which direction it's moving. Um, you know what? Actually, no, that's fine. I'm gonna leave it how it is. So let's move on to the next slide. I only have a few of them today, or a bit more than a few. So the surge in reported illicit crypto flows during 2025 is another key price or key piece of this story. So what happened in the is that researchers have tracked a record amount of value that is moving through the crypto networks, and it's also tied to a lot of crime, sanctions evasion, and also hacks. So while the numbers are sounding the alarm, they are often used as more of a justification for broader crackdowns that affect the legitimate users like my business more than actual criminals. And I would say this is actually very bearish for my business in the perception sense, because the headlines like this can actually scare the everyday people away from anything involving blockchain, even when the use case is very transparent and also lawful. However, the deeper truth here is that the entire environment rewards platforms that can clearly separate their lawful digital participations from the speculative or even opaque behaviors. So my business, uh, it fits directly here because we don't have custody of funds. We don't have those sort of implementations to even risk the user's funds in that sense. Um, of course, if you were to use the blockchain technology, you need to connect the wallet and sign something stating yes, that you can use the wallet, but you can get rid of that authorization very clearly and easily within the Phantom wallet if you don't trust a sort of uh, DApp is what they would call it, a decentralized application, which is technically what I've built. And that entire transparency um, around what we tie digital action to um, makes it easier for the regular users to actually understand what they're participating in as well. In the broader sense, for the global power structure, this is another sign of how it's actually slowly changing when we talk about the the illegal activity and how that's all affecting the crypto markets. So we only have a few more slides here. All right, let's move on. So Russia's progress towards a crypto seizure law is also another key piece of the story here that also deserves attention. So what happened is that the Russian lawmakers moved much closer to approving legislations that allow the state to seize digital assets under certain conditions as part of a broader regulatory framework. And this signals a much more aggressive posture towards the entire control thesis um, rather than some sort of integration um, posture. And this is somewhat bearish for my business because in those jurisdictions, because forced custody and seizure undermine the idea of digital ownership and also sovereignty. Um, it's when people fear losing access to their assets, that's when the participation will drop. So this makes my business model more compelling to users, mainly because we're not storing abstract digital wealth. Um, we're it's literally just like a rewards utility sort of thing. If anything ever becomes of that, then it wasn't explicitly worked on directly. You know what I mean? It was a product of everything else that was built around it. So when people are fearing losing yeah their assets, the participation drops, and this makes my business model much more compelling. Yes, I said that. So we're not. So let's see here what this says. I really need to work on this. This isn't quite perfect yet. I like the idea that I have going here, but need to work on it. So what it's saying here is that my business um, it converts the activity and like book creations and stuff or purchasing silver even into even more um, it converts it into more physical sort of stuff. So it's not just purely digital. Um, so the non-custodial structure for um, the bonk bot that I've been building, it ensures that I'm not holding assets that could be seized. So any assets that would be seized are literally just the tokens that I use to um, fund the features on my platform. That would be the only sort of funds that would be seized. And looking at this from the global power structure, it doesn't have much of an influence, um, because this isn't like a bill or a law being, or this isn't something that defines how the businesses run. It's only technically a safeguard for the bad actors, like we were just talking about, when it comes to illegal activity. So the fact that like the Russian lawmakers are okay, we're able to seize your assets, that makes sense, in my opinion. Now let's move on to the next slide. This is the third to last slide. So the investigation into a $40 million crypto theft tied to personal connections is also telling another event. Um, so what happened here is that authorities are probing a very large theft where personal access and trust failures played a very central role. So it is a large theft where personal access and trust failures played a central role. Uh, I wish it was a bit more specific. So this was not a failure of cryptography, but instead of custody and human systems. So this is very neutral. It says here for my business because it does not change my operations directly, but it does strongly reinforce why my structure matters. When centralized custody exists, the human incentives create single points of failure. Even I have admitted on this channel that I myself am a single point of failure. Uh, and I can tell you that clearly right now, um, because what I'm dealing with does require a immense amount of trust. Um, that trust is realized, and I've done my best. I do what I can to eliminate as much of that um, temptation as possible. Because let's say, for instance, somebody does provide liquidity to the decentralized pool, right? They've effectively become a public investor, and my company has effectively gone public at that point. Um, and so I do as much as I can to eliminate any sort of temptations when it comes to looking at large sums of money and managing that. Of course, I'm managing a business, and people could buy technically $6,000 worth of silver from me right now, and I would process that, and I would be very happy. I'd be a very happy business owner. Um, but that's not like millions of dollars, like when you're staring at millions of dollars in your business's portfolio, um, you really have to be able to separate your emotions from what's actually going on. Um, and in a lot of these businesses that have custodial models, they're not necessarily maybe thinking on the same track that I am. So there's that. So moving from the second to last one here. The investigation into a $40 million crypto theft. Oh, yes. Okay, I was reading this. This is the second to last one. Okay, let me actually go back and finish that one. I don't think I finished that one. So, Where was I here? So my website avoids this by never really holding customer funds, and that's true. I never ask for the users to trust my platform with their assets. The way my platform works is that when you try to use the trading bot, the bonk bot, what I call it, is it will build transactions for you using toast notifications. Um, so my platform and its value proposition is built entirely around the user-controlled actions that earn real physical silver. And it's not just based around hype or pooled capital or even delegated controls. This is a legitimate business model that gives users a very clear sense of ownership and also responsibility. Uh, so it also removes the sort of risks that can also lead to massive single event losses because I never ask for any crypto keys or whatever like that. Um, I don't ever risk just having access to wallets. Imagine a bank that could access other bank accounts. You know, like Bank of America could go and access Chase bank accounts. That's sort of what a custodial model of crypto is. That's what it looks like. Because crypto by itself was, it's sort of a, you become your own bank sort of deal. In the bigger picture, this does move the global power structure very slightly, but ever so slightly. Um, Now let's move on to the second to last graph here. I think I'm on the right one. I might be missing a slide. Anyways, I'll just keep going from here. I'm actually just going to wrap this up with these last two. Okay. So the enforcement action by Australia's regulator against the crypto misconduct is also another relevant story. So what happened is that a court upheld very significant penalties against a firm for misleading or having unlawful behavior. It's reinforcing that regulators globally are indeed not backing off. And it's very bullish for my business because the enforcement against bad actors clears more space for the more compelling, compliant, and transparent platforms like my business. SolShot Silver.xyz actually benefits when the difference becomes, or when the difference between real utility and a financial institution is more obvious. The value proposition is not necessarily built on returns or speculation, but around various features and functions, and also earning tangible silver through those defined actions. And that clarity makes regulators' alignment much easier, not harder. users can understand exactly what they are doing and what they are receiving on my platform, and that's important. In a broad sense, this is another sign of how the global power structure is slowly changing over time. And finally, for the last slide here, we're going to be talking about the crypto taxation and compliance in large emerging economies and why that matters. What happened is that the governments are exploring how to tax and regulate crypto participations without killing the innovation entirely. And this is very neutral for my business in the short term, but also important in the long term because as the digital participation becomes normalized, platforms like mine that offer real world value rather than just paper gains will stand out much more. My platform and my business value proposition fits naturally within this because earning physical silver through digital engagement mirrors more historical systems where the work and the contribution led to something tangible and the actual tangible reward. We're not as a business, I'm not asking users to gamble on any future prices. I am simply offering people stability, transparency, and also some sort of physical ownership. And looking at that from above, I would say this uh, influences the global power structure, but very barely, if at all, um, because this doesn't change the fundamental systems that we've been using for a very long time, in the terms of like earning something tangible for the work that you've put in. Um, but yeah, y'all, if you enjoyed today's stream, please like the video, subscribe, and yeah, I got no viewers. Damn.